Crude oil is one of the best markets to catch breakouts and parabolic moves. You see this parabolic move yesterday. Nice. I like parabolic moves because they have little adverse excursion. If you can get in at the right time, it doesn't go against you, and the profits are quick. And the market depth indicator is one of the best ways when combining this with price patterns to capture these moves. So this was Friday's session in crude oil, Friday, November the 15th, 2019. And you see it starts out with a bid. The blues represent a rising market. A little bit of a magenta color, purplish color represents the bears, and so blue represents the bulls. And you see the rising market here, and then kind of a sideways market, and then it starts to roll over a little bit. Not much. It's kind of sideways, but you have this huge bearish pattern in the market depth indicator building. And it continues to build. Small blues, and then another big purple, and then boom, it precedes a sharp sell-off. So if you're up during Europe, 3 a.m. Eastern time, you would have been able to say crude oil is rolling over. You have a little bit of a counter trend rally after we see this bearish market depth, and then potential for a nice short trade right here. So this market depth indicator can precede big bearish and bullish price action in the market depth can precede a move, and you see this here. The purple is preceding this short sell in this market, but the real parabolic move is during the day. So at night you have more inefficiencies, and during the day, at night you might see larger pulses like this. During the day, there's more activity and the market is more efficient, and you see the pulses are smaller. So if you're watching this intraday, crude oil day session starts right here at 9 a.m. Eastern Standard Time, and it's slowly moving up. So you see this stair-step pattern. It's down, up, down, and then as you're coming into this parabolic move, you see the blues building. So the breakout doesn't happen to new highs until right here, and we're well into the blues. So if you draw a line straight down right here, the blue is building, and it's one way. It's not 100%. You can't guarantee 100% on this breakout, but it gives me more confidence to take breakouts when the order book is showing blue. It's flashing blue. It's pressing into the offers. You're pressing into the offers, so there's a demand for this. And so if the market's rising and the blue is climbing, there's a demand, and money might chase this, and you got this parabolic move. And you can get out on this at any point really the rest of the day. It just stays at the highs, and you can put in tight stop losses. So if you're wrong, you put in your stop loss here. And oftentimes when you see these stair-step patterns, once they're defined and you try to trade them, it'll roll over and take it out. And so you can't stair-step forever, but you can increase your confidence that it will break out and it will hold because the blue is building. You actually see the blue building right here as well. And so the blue is climbing as this market makes highs here. It makes a small high here, and it makes a small high here, and the blues are coming in, and you could see this in real-time price action. And so nice opportunity for a parabolic move from the day session open at 9 o'clock. And you kind of have to hit that reset button. There are purples, but at 9 a.m. you have a blue, and then you have a purple, and blue, and then on this third one, you might start looking to take the breakouts with tight stops. And that would have paid off yesterday. Using the market depth indicator for confirmation to take those breakouts can be one of the best ways that I've witnessed watching crude oil. I like to develop trading systems, but the market depth indicator is based on the order book, and there is no historical data to back test with. And so it's very difficult to develop a fully automated trading system with market depth indicator. If I close this workspace and reopen it, all this information will disappear. And once I update this and roll to the front month, apply correction, and go from December to January, this data will also disappear. And it's only during the day session that you record this. As long as you're connected, you can record it for multiple days. So let's go back. I'll show you what I mean. If you go back, I've had this open for a while now without disconnection. And if we go back to this time frame right here, 11:10. This has been live since 11:10. Have not disconnected since 11:10. So you can see how the market depth indicator works. Let's take a look, for example. The market is selling off in massive confirmation with this right here. This indicator also gives me confidence in my current trade. If I'm in a trend trade and it feels like it's at the end, I looked at the order book to help me stay in the trade longer. So in this situation, you can stay in the trade, It's getting a bit choppy here, but there's mainly just purples, and then you get a blue right here. And so you get this blue pulse. Maybe you get out of the short trade right here. Even in a sloppy, inefficient scenario where the market's making new lows, and then it's making new lows as this climbs to new highs on the day. And say if you shorted it here, endured some heat, and then you got out on this rally right here, you're still profitable. But you see it rolling over here, say on 11:09, the blues are coming in at 7 a.m. The blues are coming in at 9 a.m. You have more blues, a little bit of magenta here as it comes down here, makes this low, and then you get this blue that's building. And here's another scenario that I'm talking about. You would like to pick this point right here, but even if you don't, sometimes picking a low is more risky than buying a breakout. With a good breakout will give you opportunity for a tighter stop than picking a low, because you don't ever know when it's going to turn around. You keep trying to pick lows, and before you know it, you have a big loss on your hands as you keep trying to pick new lows. But if you pick the market as it rises and you successfully get one of these breakouts as blue is building right here, so you take this, as the market breaks out, blue is building again. And so you can put this, the goal is to get in on this, and if it runs, you put your stop loss here quickly. Tight stops, break-even stops don't work all the time, but if you get a good entry, the goal on this strategy is to find such a good entry that a tight stop loss or break-even stop loss will work. And so you catch that move right there. And that's another example of using the market depth indicator and how it's working pretty well in gold. Like the opportunities for the market to sell off during the day, I think we're in a bullish phase right here in crude oil, and can anticipate maybe $63 at least in crude oil and higher by the end of the year. And so the market sells off at night and then starts to rally during the day. One way to potentially take the breakouts is using this market depth indicator. And as the market rises to breaking through resistance points, intraday resistance points or pivot points, how does the market depth indicator look? And I mean, you could have entered over here as the market's rising. You have a blue here, so you could say, wow, it's the biggest blue of the day. I can get in right here. And you get in here, 56.55. The low down here is 56.31, so a 25-point stop loss is not huge in crude oil, so you could work with a stop loss down here and then capture this bigger move earlier. So that's a little bit of weekend strategy for you, using the market depth indicator, taking breakouts and trading crude oil and trying to capture these parabolic moves with the potential for a higher crude oil market. You kind of have to have a bias in this market, and my bias is to see higher crude prices, look for dips, look for the market to dip, and then try to find the reversal using the market depth indicator.